Hacker live stream. I hope you're doing well. Happy Independence Day to you. Happy 4th of July, because today we are celebrating the Declaration of Independence and life, liberty, and the pursuit of happiness, right? That's what this holiday is all about. And I think today is a great day to talk about stacking silver, because silver is one of those assets. It's a physical object that kind of embodies independence. It is a physical asset that you control, that you have in your custody, and you have taken away your dependence on a rigged digital financial system and given yourself some independence when you have this stuff in your hand. Now, I've got my 4th of July themed bullion out here. Anything I had that I thought was appropriate. We've got these life, liberty, and the pursuit of happiness rounds. I don't have a specific Declaration of Independence round. These have the Bill of Rights on the back here, but of course, these are the words that Thomas Jefferson wrote in the Declaration of Independence. And you're sort of declaring independence on your own, like I said, when you stack silver. You are taking control of your own assets. These pieces of metal, they don't have the counterparty risk that other forms of wealth have. No one can devalue these by printing them. Nobody can bail in your silver. I suppose, people always fire back at that and say, well, they could confiscate your metal. And yeah, that's true. But that's a little bit more work than just confiscating a digital bank account. I'm sorry there, I kicked the camera a bit. Sorry for the shaky screen. But that's all part of these live streams, right? Part of the fun. And I want to go over some of the reasons that right now is really, in my opinion, probably the best time to be stacking silver in living memory, at least in my lifetime. We'll go over some of the reasons why I believe that, because I've been stacking for a little over a decade now. I mean, it's crazy how the time flies, and I do really think that now is the best time to be getting into this stuff. Now, part of the reason is just that, the metals, they've traded sideways for a very long time. Ever since the high hit in 2011, seen big downs, some volatility, especially in silver. It's a small market, but more or less, I mean, these things have been trading sideways for some time. I see some people popping into the chat. Thank you for joining the live stream today. Happy Independence Day. Jason Taylor says he got his first 10-ounce stacker. Congratulations. 10-ounce stackers are awesome. We've got these some of these Scottsdale silver stackers right here. Now, speaking of getting into the precious metals, I know, I think that this year a lot of folks have gotten turned on to the metals. We know that there was a huge influx of new stackers that came onto the scene back in March when we had banks failing. A lot of people got their eyes open to the fact that there are some real problems in this financial system. And, that is one of the reasons that right now is such a great time to be stacking, because that initial influx of interest in the precious metals, when we saw the banks begin to fail in March, when SVB went under, when there was some skepticism about whether or not depositors would be made whole, all these people came into the metals market. But now interest, really, it seems like it has died back a bit. I mean, we have seen the price of the metals come down a little bit. It hasn't been a massive correction, but they've kind of been this just slow bleed downward. And I think that right now, that's something we can take advantage of. Some lower prices, some lower premiums. Remember at SD Bullion, they had $500 minimum orders and, several weeks lead time. So that kind of gives us a preview of what can happen when we get some significant economic disruptions. And I really think it was just a preview of what was to come. Everybody in the chat saying happy 4th, Silver Lion, John Bethia, Scott Semya, thank you very much for spending some of your holiday here with me. Happy 4th of July to you. And today's video is sponsored by SD Bullion. And if you want to get some gold or silver, definitely check out sdbullion.com. They have got some amazing 4th of July sales. The one that really has caught my eye, of course, they have these Proclaim Liberty bars on sale, which are always cool. I do like them, and I think it's a good message. I love liberty of all sorts. But right now, they've got junk silver for $21 face, and it's any quantity pricing. You just got to get a $10 roll. I'm thinking of picking up maybe a couple of those because we're finally seeing the price of junk silver, the premiums, come down a little bit. And I do think that when financial crisis rears its ugly head once again, junk silver really seems to be one of those things that dries up just rapidly. It's really the canary in the coal mine. And It's not just that the premiums go up, it becomes almost impossible to find, without paying just absolutely exorbitant prices. And if my forecast is correct, that, the banking crisis that we saw in March, just a preview of much worse things to come in the relatively near future, then junk silver is going to be a great thing to have on hand. And I remember, I think it was a week or two before the SVB crisis kicked off, and we had seen the premiums on junk silver come way down. I mean, it's not even nearly as low as it was. I think you could get it for like 16 or 17 times face for about a week there. And I picked some up and I mentioned it in a video. And then it was not 1 week later that the bottom just fell out of that market and the supply completely dried up. So, I mean, I just kind of get a similar feeling right now with this return to normal premiums that we've got in junk silver. I don't think it's going to last long. Of course, none of this is financial advice. I always have to mention that in these videos. I'm not telling you what to do, but that's what I'm thinking of stacking right now. So let's talk about some of the reasons why right now is the best time to get started stacking. I almost envy people who are beginning now because, like I said, I've been stacking for a decade plus. Really, the thing that cued me into the precious metals market was the 2008 financial crisis. I mean, it became apparent to me when I saw that everything was a house of cards. Once we saw QE begin, it was, I think, obviously debt monetization to those who were paying attention. They really cranked up the printing presses, and that's all just become kind of normalized now. But the thing is that we haven't really seen the precious metals move much, right? I mean, silver's at $23 an ounce. In 2011, it was at 50. So we're at half the price of where it was. And going back even further, if you go back to 1980, the high that it hit that year was $50. And if you adjust that for inflation, that's almost $200. So, and of course, that's just using the CPI, the government numbers. The real inflation adjusted price of silver is much higher than that. And yet here we are at $23. So what gives? Well, there's reasons that I think silver has remained so inexpensive. There's the appeal of the cryptocurrencies and the tech stocks, the massive rapid gains that people have gotten in those things over the years. There is the fact that there probably, well, not probably, there definitely is some price suppression on the paper markets. I mean, how big of a impact that has on the spot price, I think, is up for debate. But we know for a fact that some traders over at JP Morgan have been spoofing the price of gold and silver. They were convicted, and JP Morgan's had to pay almost $1 billion in fines for manipulation of the precious metals market. So we know that that's one of the factors. But it's really just an opportunity to me, the fact that silver is this low. It's way below its inflation adjusted high, and I think it will eventually be moving much higher. Now, one of the consequences of silver remaining so cheap for so long is that we will now begin to experience shortages in it. It's very likely that that will occur. Now, shortage doesn't mean there's no silver available, of course. That's an important distinction. Whenever I talk about shortages in any commodity, I get comments that say, oh, there's plenty of this commodity near me. Well, listen, there's plenty of silver right now, for one thing. I mean, there's no shortage yet, but we are headed that way. We did have a massive deficit in silver. According to the World Gold Council, or I'm sorry, the Silver Institute this time, the Silver Institute tells us that the deficit, so that was the decline in the above ground supplies. It was the amount that consumption exceeded production of the metal, was close to 250 million ounces. I think it was like 230 million ounces, one of the biggest on record. And that followed another year of deficit in 2021. And those are going to continue to grow. This is a headline from Bloomberg published July 2nd, so 2 days ago. I mean, very interesting to see the mainstream financial media covering this. The world's appetite for solar panels is squeezing silver supply. And I talked about this research paper that was published by, I think, the University of New South Wales, about how new technology in the silver industry is leading to even greater silver consumption. Because one of the things we've heard all along whenever we talk about solar, when it comes to the silver consumption, is, well, yeah, they're getting more efficient, though. They're reducing the amount of silver that goes into each panel. But that apparently is about to change. Here is some information from this article regarding this new solar technology. So it is called, let's see, so we've got currently PERC cells. That's the new technology. And the new technology, the TopCon cells, they require 13 milligrams. And then heterojunction is another highly efficient new solar technology, takes 22 milligrams per watt. So it's an increase of more than 100% per watt. And you got to remember that the amount of silver that goes into these solar panels is relatively small in terms of the individual panels themselves. I mean, 22 milligrams per watt is not that much. But when you consider the fact that they are around the world, solar panel production is ramping up for a number of reasons. I mean, a lot of it has to do with policies, green initiatives by governments. They're subsidizing this. But listen, I mean, whether or not solar panels get built because of market forces or because of government planning and government interference in these green agendas, it doesn't really matter. I mean, those solar panels still use silver. So, as far as silver goes, this is very important information. And this article goes on to mention an interesting fact. It says the trouble for silver buyers is that cranking up silver supply is far from easy, given the rarity of primary mines, because about 80% of supply of the metal comes from lead, zinc, copper, and gold projects with silver as a byproduct. And that's a fact. Most of the silver in the world is a byproduct of other metals being mined. And right now, if miners are reluctant to begin new projects because of regulation, because of economic uncertainty, there's a number of reasons that miners are kind of shying away from starting new mines. That means that there's going to be less silver being produced. And even if there are new projects in the works, and part of the reason that there aren't so many projects in the works, again, is because the price is so low. But even if the price moves up and new projects start to come online, it can take up to 10 years for a mine to actually begin producing silver. So basically, we are stuck for the short term with the mines that we have. And if consumption expands significantly, then there's going to be a shortage. And that doesn't mean that there won't be silver again, but it does mean that the price for silver will have to move much higher to achieve a market equilibrium. They mention the article from the University of New South Wales in this Bloomberg piece. And I mentioned that in a recent video, that paper. We kind of went over that in a little bit more in depth. But according to that paper, if you recall, they are forecasting that the solar sector could consume between 85 to 98% of global silver reserves by the year 2050. So that is the above ground supply of silver. I think best estimates are there's about 3 billion ounces of silver above ground in some usable form, and that's a lot less than there used to be. Industry has consumed quite a bit of that metal, and the production, something like 800 some million ounces that they mine out of the ground every year. So, as consumption goes over a billion ounces, I think we consumed something like 1.2 billion ounces last year. And production is around 800 million. I think there's about another 200 million from recycling. So you can see that at this rate, we'll deplete those above ground supplies pretty rapidly. And, in order to actually consume all of those above ground supplies, the price will need to go much higher. I mean, grandma with her sterling silver spoons and plates, she's not going to be taking those down to the refiner unless the price of silver moves way up to incentivize her. So it's not like we have to burn through all the silver before we see a big move up in the price. I mean, it just means that the weaker hands will get taken out first. And then for folks who are holding the metal, assuming the supply continues to decline, I mean, that's a good situation to find yourself in. And you got to remember the vast majority of investors who have exposure to this stuff, they don't actually have this stuff. They have ETFs or paper futures contracts. They have all this derivative paper silver, and there is far more of that in existence than there is actual physical bullion. So that's why I think right now is such a great time to be stacking. Now, mind you, I didn't say buying shares of the SLV. I said stacking metal, like getting real physical, tangible bullion in your hand. And listen, there's a reason that this is not a particularly popular thing to be doing right now. I mean, I think that stackers, it's not like they were a big community to begin with that had to be marginalized. But I mean, seriously, if you talk about stacking gold or silver with your average person, they kind of label you as like some kind of a Yahoo survivalist conspiracy theorist. But I think that perception is changing. And I think it's to our advantage as stackers, that the vast majority of people don't actually have physical metals. If they have some in a portfolio, they probably hold, an ETF, maybe some miners or something, but very unlikely that folks have actual physical metal. It's a small group of people that do. But as we see the economy continue to deteriorate here and shortages in the supply of the metal begin to build, I think it's going to be a very lucrative thing to be doing. And I mean, we talk a lot about the preservation of purchasing power with precious metals, and that really is kind of where they shine first and foremost. But also, I think that there will be an appreciation in purchasing power for those of us holding physical metals relative to other assets, relative to paper assets, stocks and companies, vehicles, houses, all sorts of other assets out there that I think are going to decline in value relative to the precious metals. I mean, those assets might move up in dollar terms, but I don't think they're going to move up as rapidly as the precious metals. And this is just my forecast, But listen, you don't have to agree with me, but I am putting my money where my mouth is. A lot of times people call me a shill or a silver salesman for SD Bullion. Look, I got a channel sponsor, but I buy this stuff myself. It's not like I'm selling my own personal physical silver. No, I've never sold an ounce, and I don't intend to until the price is much higher. Let's see. Stacking is easily one of my best moves for my finances. Hold my wealth. Silver Lion says. Scott says if it goes up to $100 an ounce the next 3 years, I will sell all of my silver. If silver went up to $100 an ounce in the next 3 years, I would probably sell some too. It would kind of depend on where the gold to silver ratio went. I think that's kind of something I like to keep an eye on in terms of, whether you should be selling your silver or buying silver. If the price went up to $100, but the price of gold kind of kept up with it, then I don't know. I mean, I would still think silver was undervalued. But yeah, look, one reason you might sell your silver is to pay off some debts. If you have some kind of a debt that is accruing interest and you see that inflation is destroying the value of that debt and you want to sell some hard assets to pay it off, certainly. Maybe you want to roll it over into some other assets, like if we get a housing crash, but the price of silver spikes up, then yeah, sure, you might sell off some silver and move into some of those other assets. Maybe you sell some silver and buy some gold if the gold to silver ratio collapses. But I don't think I would just want to sell all my silver and sit in fiat if that's what you're talking about. No, I wouldn't want to do that. Are we even going to have dollars 5 years from now? T. Lawton says. Well, that's a good question. Yeah, we probably will have dollars, but the question is how much will those dollars purchase for you? That's the important thing. And in fact, I suspect that we're going to have dollars 5 years from now. We'll probably have a lot more dollars than we have now because, I mean, just look at the US debt clock. They are borrowing tremendous amounts of currency into existence every day. Look, we're $32.3 trillion now. That's wild. I mean, I think I made a couple videos ago, we were at 32.1. And if you remember, there was that Deutsche Bank analyst I was talking about in a recent video. His forecast was that the US would issue another $1.3 trillion before year end. Now, that article came out, I think, in the beginning of June. That's when that analyst was saying that. But yeah, certainly we're going to be issuing a tremendous amount of debt, creating a huge amount of dollars. So we will have dollars. We'll probably have far too many of them. And that's why this stuff in dollar terms is going to increase. But I think once folks kind of get their heads wrapped around the fact that inflation is not going anywhere and we're probably going to be getting a lot more of it very soon, that's when the flight to safety is going to take place. That's when folks are really going to begin bidding up the price of precious metals. And that's when we're going to see a bit of a change in how the precious metals are valued. So I say that now is perhaps the best time to be stacking silver because you don't have this huge weight in front of you, right? You don't have the 10 years or 12 years between 2011 and now. I mean, if you've been stacking over the past decade, sure, you're probably getting a little bit impatient, but I don't know. I'm not because I just see kind of calamity around the corner. When you're borrowing this much money and your deficits are, $1.6 trillion annually, and the real deficits are higher than that. And you've got $191 trillion in unfunded liabilities that are going to have to get funded one way or another. You got to realize that, the dollar is getting a little long in the tooth, and either one of two things has to happen, right? They're going to have to massively cut the size of government and the amount of spending, or they're going to have to run the printing presses. And I mean, just look around you. Look at what the average person thinks, folks should do. If they start promising stimulus checks to, counterintuitively fight inflation, and of course, that's probably where we're headed. Inflation will get so out of control, they'll have to, pay people off not to riot as long as they can. They kick the can down the road over and over again. But, if a stimulus check is in the mix, the vast majority of people are going to go for it. They will elect the candidates that will do that. They will opt for the free money, helicopter drops of cash, and that's what'll happen. But I mean, I suppose it's possible we balance the budget. Everybody becomes, massively fiscally conservative overnight, and everybody adopts the principles of Austrian economics and abandons Keynesian economics. But it's just not going to happen. So we're headed towards massive inflation, if you ask me. And you don't need to be a PhD in economics to look at $32.3 trillion debt, 122% debt to GDP ratio, and also the phenomenon of global de-dollarization to understand that the dollar is going to be losing a lot of its purchasing power in the relatively near future. Let me know in the chat if you are stacking at these prices. Do you think now is a good time to stack, or are you getting frustrated with the precious metals? I'd like to get a pulse. We got about 86 people on the live stream. I'd like to get a feeling for the pulse out there, whether you think it's a good time to stack or whether you're getting frustrated. And also, like Scott said, if silver hit $100, he was going to sell all his silver. Okay, so that's an interesting number. Put a number in the chat. What's the price that you would sell? Let's not say all of your silver. Let's say you'd sell half. You'd sell half of your silver at what price? I would be curious to know what everybody is saying. Yeah, a lot of people are saying time to stack to the roof. The new world currency should be monopoly money. Yeah, well, it might as well be, right? I mean, dollars might as well be at this point. So here's another story I wanted to share with you today. Argentina's currency crisis is so dire that it's allowing people to open bank accounts in Chinese yuan. Now, we covered this story in a recent, I think it was in a live stream, about how Argentina is experiencing this massive dollar shortage, and how even US companies there like Whirlpool are relying on the Chinese yuan because otherwise they have to shut down their factory. I mean, it just, you got to do what you got to do to keep the doors open, right? So dollar shortages, so they're using one. Well, this is all just part of this de-dollarization. And the thing is that we're kind of witnessing a perfect storm here, folks. We've got massive printing, massive deficits in Washington. The Federal Reserve is, I think they're just on the verge of massive, massive money creation when this bubble pops. And as these countries around the world drop the dollar, it is going to just be another factor that is going to incentivize the Federal Reserve to go back to slashing rates, to printing money, to doing QE. They're going to have to because people aren't going to be buying treasuries. These international entities are not going to be buying U.S. treasuries. We're going to see rates soar, and the Fed will have to intervene. This is interesting. I just want to look real quick at the price chart of silver and comment on something. Recently I did a video on this, but Federal Reserve Chair Jerome Powell, he recently told us that we were probably going to be getting at least two more rate hikes before the end of 2023. And I think it's very interesting and very telling the market reaction to this. So you can see we have not actually seen a sell-off in the precious metals following that announcement. That's kind of what you would expect, right? If the Fed says, yeah, we're going to be more hawkish, we're going to hike rates, you would expect to see assets like gold and silver fall. I mean, in the past, that's kind of the dynamic that we've witnessed. We have witnessed hawkishness on the part of the Fed leading to lower gold and silver prices. And then if you get some dovishness or you get some data that kind of indicates maybe the Fed can slow things down, you see the price of silver rise. But that's not the dynamic at play here. And one of the things, I was listening to Peter Schiff's most recent live stream, and one of the things he said was that he thinks that the market's reaction to Powell's comments are an indication that they're not buying it, that the Fed, even though they're talking a hawkish game and saying they're going to hike more, investors and market participants are beginning to realize that that's just not the case, right? That the Fed could very well be forced to return to an easy money policy. And I think that's as good an interpretation as this market reaction to this market reaction as any others that I've seen. And very well, that could be the case. I mean, yeah, the Fed, when they start getting really hawkish, you have to understand the Fed likes to use these hawkish talking points to try to coax the market into having lower inflation expectations, which they believe will turn into lower inflation, right? They don't understand that the thing that causes the inflation isn't, businesses being greedy and demanding higher prices, or workers being greedy and demanding higher wages, or people thinking that inflation is going to go one way or the other. The thing that creates all the inflation is the Fed printing all the money. But the Federal Reserve doesn't want to acknowledge that. They don't even necessarily believe it. They like to attribute the inflation that we've witnessed to all these other factors. Putin's price hike, the supply chain disruptions. I mean, all those things play a role, but I think that even absent any of these other factors that the Fed likes to blame, we would eventually see significant inflation simply because they've expanded the money supply so much. They bought up what, $4 or $5 trillion worth of treasuries as in response to the COVID pandemic lockdowns. They massively expanded their balance sheet, massively expanded the money supply. Inflation is what you would expect to see there. So. Anyway, I thought that was an interesting take on the market reaction to the Fed's comments. Also interesting, I saw this headline on U.S. News and World Report titled De-dollarization. What happens if the dollar loses reserve status? This was from June 27th. And, I just think it's very telling when you start to see de-dollarization entering the mainstream like this. And clearly, that is something we are headed to. In just a couple of weeks, the BRICS nations are going to be meeting in South Africa, and they're going to potentially be introducing an alternative reserve currency, possibly one that is even backed by gold. And what do you think? Speaking of gold, what do you think of this gold back? I thought this was an appropriate one for July 4th, this 50 gold back note with Libertas as the virtue. All the gold backs, they have a virtue kind of depicted on them in a work of art, and I think they're very cool. And I thought that one was appropriate. That's one of the new Wyoming goldbacks. By the way, if you like goldbacks, there is a link down in the description to Alpine Gold Exchange. They've got excellent prices on the goldbacks. That is an affiliate link. If you use it, it helps support the channel. Thank you very much for that. Speaking of supporting the channel, don't forget, you can sign up to become a channel member. We'll be doing some, once I get some members, we'll do some member-only videos, maybe some live streams or something. I'll schedule them probably. I'll chat with whoever signs up to be a member. It's $2.99 a month. Would certainly help support the channel, and if you get some value from these videos, I would really appreciate it. YouTube's kind of trying to incentivize us to set that up, and I figured it would be a interesting thing to trial, right? I know we do ads on the channel now. I don't know. Some people don't seem to mind that. Some people are bothered by it. The membership thing is sort of an alternative thing, but if you would like to support the channel, you can now join and become a channel member. You get some special badges and stuff like that in the comments section. One of the things that this article mentions is that the US dollar has now accounted for 58% of foreign exchange reserves held by overseas central banks, and that is a record low. I covered this also in a recent video where I was talking about JP Morgan, kind of commenting on this. And gold has risen from 11% of global reserves up to 15%. So, countries are dropping the dollar. They are moving towards just using regional localized currencies. And, like we got that question in the chat earlier, will we even have dollars in 5 years? Yes. Yes, we will. But it may very well be that they're just one of many currencies that is used for international trade. I mean, it's just like Argentina, now allowing people to open bank accounts in Chinese yuan. That may become a very normal thing around the world where you see, well, yeah, you can open a account denominated in dollars. You can open one denominated in perhaps the BRICS currency. You can open one denominated in the local currency. You can maybe do the Chinese yuan. There will be all these options, and that means that the dollar is going to decline in value because right now we have the lion's share of the market, and that confers a tremendous value benefit to the dollar. That is the network effect. So the fact that all of these countries hold dollars right now and all these commodities are priced in dollars, you got OPEC oil priced in dollars, you got most major world commodities, food, energy, metals. This is all priced in dollars. And so if you want to buy this stuff, you got to use dollars. But in the future, possibly the near future, it will be like, yeah, you can buy it in dollars, you can buy it in yuan, you can buy it maybe in a BRICS currency. And, the BRICS currencies, you got to realize they are the producers of a lot of the world's currencies. I mean, China, number one producer of gold. Russia also makes a tremendous amount of gold. South Africa makes all the platinum. So a lot of these commodities are coming out of these countries. And, very likely next month at that BRICS meeting, Saudi Arabia and Iran and a lot of these big OPEC oil producing countries, they are going to join the BRICS organization. And so then they're also going to control where the energy is coming from and how the energy is priced. And we're already seeing this with Russia. They make a lot of oil there. They export a tremendous amount of gas. They're not pricing theirs in dollars anymore. And when Saudi Arabia decides to accept yuan or what have you in exchange for oil, we're already seeing this. China has bought natural gas from the UAE via French company Total Energies. They're buying it with Chinese yuan. So we're already seeing the global energy market shift away from dollars. But when it really happens, when it hasn't happened yet, OPEC is still selling their oil for dollars. So that tells us that when it does change, when we do see this decline in the network effect of the dollar, a lot of those dollars are going to be flowing back home. And that means that the money supply domestically is going to increase. And that means that the dollar value of just about everything is going to increase. And I think that precious metals will be the disproportionate beneficiary of that event. Now, I mean, when is that going to happen? I don't know. Might happen next year. Could happen August 24th at the BRICS meeting. Very well. Could be the case. There's no telling, right? But I do think it is likely around the corner. And, time frames, what's a short-term time frame, right? Is a year a short term? Well, yeah, I think so. I think a year, if you tell me, well, the dollar's got a year left, well, that's pretty short term. And mind you, the dollar has been the world reserve currency for like 80 years, close to, following the Second World War. It has been a purely fiat currency for, what, 52 years? That's quite a long run. Very long run indeed for a purely fiat currency. And, the scale of the dollar's dominion and the scale of the debt that we have been able to export around the world, all the inflation that we have exported around the world as a result of the dollar status as the world reserve currency, it's never been rivaled in human history. And that means that the collapse of the dollar will be one of the biggest events in human history. I think it'll probably be the biggest economic event to date. And that's sort of the trend, is like the dollar for the modern world has always been the world reserve currency. In the modern world, post World War II, it's nothing but dollars, right? You could say maybe gold, because the dollar used to be backed by gold. So maybe you could say, well, gold was sort of the reserve currency until 71, but then it was purely fiat dollars. But in the really, truly modern world, the dollar has always been the reserve currency. And when that changes, it's going to be a monumentous event. It's going to be huge. It's going to be a complete paradigm shift. And if you've never read the book, The Fourth Turning, it's a book about generational theory. I highly recommend it. I think it sheds a lot of light on what we're witnessing right now. And the idea is that about every 80 years or so, you go through four generations of human, and every 80 years, you see a massive societal upheaval. And up until this point, that has proven true in the history of the United States. You've got 1776, July 4th, Declaration of Independence, right? Pretty big deal. Kicks off the Revolutionary War. And then you've got the Civil War in the 1860s, and then you got the World War II in 1940s, and then you have got now. That brings you right to now. And according to that fourth turning generational theory, this whole paradigm is going to get turned on its head with the culminating event falling sometime around 2026. So, we're halfway through 2023, folks. 3 years. It goes by quick, right? And a lot can happen in 3 years. I mean, just look at go back. Let's say go back 4 years to 2019, and look at how different the world was. So the world can change a huge amount in a short span of time, and it seems like we're still on that roller coaster, and things are just kind of accelerating. So massive economic change, a shift to a multipolar world order, very well could be on its way. And that's why I think right now is such a great time to start stacking. You don't have to wait. You don't have to wait through the decade plus of QE and monetary experiments. We've kind of arrived at the terminal phase of it. It certainly seems that way. And that means that you can still take advantage of low silver prices, but not have this huge weight ahead of you. At least that's my forecast. I mean, who knows, right? You don't know what you don't know, but I do think that now is just such a massive opportunity to be getting your hands on physical metal. That's what I'm doing. And I think I'm going to pick up some more junk silver today from SD Bullion. So if you're catching this later, thank you very much. Consider joining the channel as a member to support. I know, times are tough, money's tight, and it's, a lot to ask. I know $2.99, a recurring monthly payment, is a lot to ask, but I hope you get value from this channel. And if you do, it's basically the cost of a silver dime. So if you would pay a silver dime to see a month worth of the videos that I put out, I would greatly appreciate it. And even if you don't, I really appreciate you tuning into this live stream, watching the video after the fact. Don't forget to like, comment, and subscribe. Everybody smash that like button, help get this information out into the algorithm. I greatly appreciate it. Happy 4th of July, everybody. Go out and celebrate your own life, liberty, and the pursuit of happiness. I hope that we have that, at least, for many years to come. Thanks, everybody. I'll catch you next time. Smart Silver Stacker, out.